The proverbial funding bubble hasn't burst yet, but what has expanded is our understanding of how non-healthcare sectors contribute to our health and wellness as individuals and in society. Never have we seen that come to life in a more visceral way than throughout this pandemic. The market today is characterized by high valuations, new actors, SPAC as the next plan du jour, and so much more. Next up, and no longer niche, the rise of digital health and capital markets. We're going to talk about it all. Please welcome our next group of expert panelists.
Hello and welcome to the Capital Markets session of G4A's Digital Health Forum. I'm Carrie Duncan, your moderator, and I am managing partner and co-founder of Charactero, where we advise both growth stage companies and also Fortune 500 companies on topics in and around capital markets, from financing to brand and reputation. I'm also partner at Big Impact Advisors, where I'm responsible for healthcare investments and healthcare infrastructure projects. And today, for capital markets, I think it's appropriate that we start with figures. It's no secret that digital health funding has taken off. We've seen already record-breaking year in 2020 last year, and in the first half of this year, just the first 6 months, we're already at 15 billion. This already surpasses by 20% last year's level. We're also seeing bigger deals. We're seeing faster and acceleration of those bigger deals. And driving that is the entrance of new players, such as private equity, growth stage investors. These guys are coming in and really driving some of the larger ticket sizes that we've seen. So we're seeing a lot of exuberance. And now the question is, what comes on the other side? And today, I am thrilled to host a panel of experts from various fields. And I'd like to introduce, as we start, to the panel, we have Christina Jenkins. Christina Jenkins is a venture partner at Phoenix Venture Partners, where she co-leads the firm's seed stage strategy in healthcare and life sciences. She also leads investments for portfolios femtech and active aging and longevity funds, focusing on early stage digital health and device companies. Now, before that, Christina was the founding CEO of One City Health Services, which was a subsidiary of New York City Health and Hospitals. And she built the team from 2 to 130. Also in that role, she led an over $1 billion partnership of over 220 organizations. So, I mean, the point here is that, she has advised a number of impactful initiatives. She sits on impactful boards. She's been venture investor and founder. And so Christina is here and can offer from many facets today to our discussion. Welcome, Christina.
Thank you.
We also have here Jeff Arnold, who is the CEO of ShareCare and co-founder. And Jeff's journey actually started in 1994, where he took a $25,000 loan and founded Quality Diagnostic Services, or QDS, a heart monitoring company. Since then, I won't go through all of the points because it's quite extensive, but let's just say 5 exits later, Jeff is sitting here with us, having IPO'd his company via SPAC this year. And I'm hoping that he can share some of that journey with us, because he has quite the capital markets journey that I'm sure many founders listening today would love to hear about. So Jeff, we do look forward to you sharing some of that wisdom and welcome you to the panel.
Great, thanks for having me, appreciate it.
And then finally, but not least, we have Nana Raphel. She is Senior Vice President of M&A at Jefferies International, and she wields over 15 years of investment banking experience and corporate finance experience across multiple industries. Now, important for this panel, alongside healthcare, Nana has advised many prominent deals in technology and in infrastructure. And this may not be obvious at first, but it is certainly clear that without experience, without having this experience, without having the connectivity to the internet that we have today through experts like Nana and deal makers like Nana, digital health would not be where it is today. So what she brings here with the broadband and the internet backbone is really the pulse of digital health, not only its development, but where we see trends and access going forward. And so we really look forward to hearing from her today as well. So thank you, Nana, for joining the panel.
Thank you for having me.
Okay, so I think I'm going to stick with you, Nana, as I just introduced you, and I'll ask all of you the same question as an opener. Maybe you can share with us what brought you into digital health. Why is it relevant for you? And what are some of the interesting facets you might find there?
Sure. I think if I look back on my professional experience and some of the areas that you flagged in my introduction, I think back to one of the earlier deals that I did of a company that sat at the intersection between healthcare and technology. This is a business back in 2011 called Clinical Solutions. And what Clinical Solutions did here in the UK was build the technology that sat behind the 111 healthcare line. So the 111 system, for those of you who don't know, is the alternative to the emergency call line here in the UK. So if you have a non-urgent medical need, you call the 111 line. And it's actually been revolutionary for the pandemic as people have tried to get access to healthcare through that line. And what Clinical Solutions did was really just build the software and the triage system that a healthcare worker or somebody sitting in a call center can just follow that technology and follow the triage system to channel anybody calling that line to the right outcome, be it talking to a doctor, be it talking to a nurse. And that business opened my eyes to what sort of digital health means for the world that we live in today. And of course, the 111 line has been around for about nearly 10 years now. Next year will be 10 years. And I've seen so many other businesses come through. And I think on a personal level, if I think about the journey that I go through in my life, for instance, every year I have a health check to make sure that everything's working as it should. And I do it through a charity here in the UK called the Nuffield Health. It's the largest healthcare charity in the UK. 10 years ago, I would go there, have my health check. I'd get a paper report through the mail that'll come 3 weeks after the check. This year, I filled in the form online. I got a diagnostic report which said you need to sort of watch your weight, you need to eat better, before I even turned up to the check. After the check, a day later, I get a report online which charts my health progress for the last 10 years, tells me the areas that I need to improve on. And I think that alone shows how far we've come from a digital health perspective. And I think for me, as a person, as a professional in this space, it's critical what digital health can deliver to us all.
Indeed, yeah. And I mean, speaking about the evolution of digital health, which is really phenomenal, what's happened in the acceleration of the pace. I think, Jeff, probably you can speak very well to probably what wasn't even called digital health back then. What brought you here? What are some of the early things that you saw compared to what you see today, and how is it relevant to you?
Yeah, so I've been on this kind of digital health journey for quite some time. I was a pharmaceutical rep back in the early 90s, and I met a doctor, and he taught me how to read EKGs, and we started a remote patient heart monitoring company. And this was in '94. And what I quickly learned was, even though the technology was unbelievable, at least I thought so, that you needed to build relationships with the patients to get compliance, to get results, to get used more often. And that's always kind of stuck with me through my digital health career. I started WebMD in 1998. And the idea with WebMD was health needed a homepage, that healthcare was really fragmented, and the internet offered this promise of new access where we could connect, doctors and patients and employers and health plans. This was before the world was Googling. And so the way you had to grow that business was word of mouth. So the information had to be right all the time. Had other couple of technology businesses along the way that we started and sold. One was called How Stuff Works, and sold that to Discovery Channel, and went to work at Discovery and got introduced to Oprah and Dr. Oz, and got asked the question, if you could do WebMD over again a decade later, how would you do it? And I went to the Wayback Machine, which is this cool website you can go look at of what were things way back when. And I was looking at WebMD, and I thought that idea of health having a homepage was the right idea. It was just a little bit early, that people had to get over first just having access to information. But now what had changed was people had smartphones. And what if you could use enabling technologies to really truly bring the ecosystem to the palm of the person's hand? So instead of having 10 apps to manage your health, it's just like you don't have 10 apps to manage your money. You know, how could you have one place for the doctor, the employer, the health plan, and which the person owned the data? So if they left their job or they changed their doctor or they moved their health plan, their data went with them. And then how could that create this sense of empowerment that could take us to where I think digital health is exploding to today, and, you know, maximizing all those, you know, massive funding numbers that you mentioned.
Thank you. Thank you very much, Jeff, for that comment. And I think, Christina, also, you also bring quite a relevant view here to digital health. Can you share with us as well what your thoughts are?
Sure, sure. Hi, everybody. It's so nice to be with you. Just like Jeff and Nana, I think the promise or the potential of digital health is part of my personal ethos. So the promise is really in providing a solution to problems in the US healthcare system that seem intractable. So if we talk about the broad categories that sort of get in the way of health and wellness, there's a huge access problem here in the United States, where we'll say access is your ability to get care at the time you need it in a convenient way. Experience, how you as a consumer or a patient interact with your doctor, with your clinic, with your health plan, with your hospital, and now with more and more consumer knowledge and use of at-home apps and remote monitoring, how you interact from your home or from your community. And importantly, value, which is a big problem here in the US. It's the what you get in terms of health outcomes for what you spend or what you pay. Lots of room for improvement here, and digital health can address each of those things really meaningfully and sustainably. And so when I'm looking at early stage or even seed stage companies, I'm looking for folks who have thought about those parts of the problem and have a credible plan in place to build evidence that they're improving outcomes, value, experience, or access. And so just thrilled to be able to talk about those things with these other great panelists.
Yes, and I mean, you brought up the investing side, and as we're focusing on the capital markets, I'd be really interested, well, with all of you, but specifically focusing on you, Christina and Jeff, on investment trends, because digital health is such a huge umbrella, and there are areas that were hot and then more emerging areas. And I'd just be curious, Christina, while we have you on the mic here, what are some of the technologies that you're seeing? I think if I can maybe put in my 2 cents from a European perspective, femtech, or technologies related to women's health, femtech as it's called now, is large and emerging, and was thought to be niche, but in fact isn't. And we've seen some great growth here, nowhere near what's going on in the US, but we've even had an exit with Candy Therapeutics bought by Bayer last year. And over in the US, the Progeny IPO was a huge shift, I think, in investor sentiment that this is not just something niche. But on the ground, on what you're seeing, maybe you can share with us some interesting trends in that sector.
Sure, happy to. Lots of us who have been investing in the health of women for a while sort of scratch our heads and laugh that it would be called niche, since we're half of the global population, and understanding the health of women is what will enable personalized medicine and really effective care in the hands of consumers. So this is a huge market, 50 billion by the end of 2025. But right now it's nascent, it's emerging, and that's because we're operating against a backdrop of years and years of underinvestment. So 3% or less than 3% of venture dollars go into companies that focus on the health of women. At the end of 2019, there were something like 150, 160 companies globally targeting the health of women. So it's early. The most mature companies tend to be in telehealth, or more specifically around fertility and women's reproduction. You'll see companies like Maven and Kindbody get lots of later stage investment, but lots of opportunity in other areas that are big market potential, menopause thought to be a $20 billion opportunity. It's complex, but digital health solutions that first will engage the consumer, then activate her to spend money on herself in a way perhaps she hasn't in the past, and deliver targeted evidence-based solutions would be really, really important and attractive to many investors. So outside of just reproduction, there's chronic disease like cardiac disease that is the #1 killer of women, autoimmune disease, Alzheimer's, all disproportionately affect women, all with early stage companies in the ranks. I think as a private equity or venture market, we may need to tolerate sub 10x exits for a while, and a lot of the exits may be on the acquisition side. So we see Organon, Merck spinoff, we see Cooper, Hologic making acquisitions, because some of these companies tend to be single product. And in that way, I guess they are niche. And so lots of us are just sort of waiting for the roll-up opportunity. It's coming, and it's too important to neglect.
Yeah, and you made some wonderful points there. And, you know, I think that is an area, I mean, I think Bayer is active there and has been doing a lot historically, but we're starting to see the landscape enrichen, and exactly those topics are things I think we'll be seeing more of. And I'm really excited that there are folks like you out there actually greasing the path and making sure that these founders can actually get traction and bring real solutions to the market for the whole person and not just a couple different facets. And Jeff, I'm going to turn to you now, because with all of that juicy oversubscribed pipe money, you must have it earmarked for some M&A. And you know, people probably have their ears right now to the speaker to find out what some of your plans might be in terms of you know, what you might find exciting.
Yeah, so I you know, what I find exciting is you know, we've now raised over $1 billion in capital at ShareCare to pursue this idea of platform over point solution. And so you look at all these wonderful point solutions that are out there. It could be for medication adherence or for diabetes or transparency or telehealth. And what we found in the market in the US is it creates a lot of vendor fatigue for the buyer. So imagine if you're the HR department of a large, you know, self-insured employer, or you're a health plan, or you're a government agency trying to procure all those point solutions in a way that the data is interoperable and the user experience is easy to understand, and that it's affordable for all is a real challenge. So what we're doing at ShareCare is basically saying, you know, we're a profitable company, so our growth capital is not going to fund losses, it's going to fund growth. Growth in sales and marketing, growth in M&A. We've made 17 acquisitions in the last 8 years, but it all centers around how do you go from being episodic to everyday, and how do you take healthcare, digital health, from transactional to experiential? And the way we think about it is this big old ecosystem of healthcare can be broken down into 3 pretty simple concepts. What's the person's baseline? So for us, we've had 50 million people take the real age test. It tells you what your body age is. What's the person's real time? And how do you look at that from a macro standpoint? So your sleep and your stress and your steps and your medications. And then more importantly, how do you take users on a data-driven, evidence-based journey? And basically create a journey using technology, machine learning, and AI and constructs that the doctor, the employer, and the health plan all buy into. So how do you know your numbers? How do you reduce your risk? How do you manage your conditions? How do you understand your benefits? How do you access the healthcare system? And so those are the types of frameworks and platforms that we're super excited about at ShareCare, and trying to build a platform for all. So whether it's in managed care or commercial business or government business or health systems, or even more importantly, direct to consumer.
Okay, so that actually covers a lot, but I think that in your business model, you are more of a all-encompassing solution.
Yeah, so I think of our business like a wedding cake. You know, on the bottom is enterprise. So for us, it's a $240 million division that's made up of state governments, the Delta Airlines, the Blue Cross Blue Shields of the world. And then in the middle is the providers. So we have 6,000 health system clients. I hope one day we create ShareCare enabled clinicians. So when you see the ShareCare logo with your doctor, that tells you that you can share your data with your doctor and your doctor can prescribe ShareCare. And then lastly, this idea of having brand permission with the consumer, I think is really important as you build trust and try to get to everyday usage. And so we're trying to touch people in all aspects of their life, really to build brand permission with them, to be able to have a more holistic relationship, not only to cover physical health, but mental health, financial health, sense of purpose, sense of community. And with ultimately, we see the opportunity is to really build that Waze for well-being. So the same way you use Waze to navigate certain directions, you know, how do you build user experiences that are data-based that help people navigate their well-being, you know, in the palm of their hand, real time, in very hyper-local ways. And so we get super excited about the promise of that, you know, over the next 3 to 5 years.
So as we were mentioning with the other panelists about the investment trends, I think, Nana, we would also like to hear your point of view on some of the things. I mean, as Christina just mentioned, femtech is an area that is large and growing, emerging, and expanding beyond some of the traditional areas. Also, Jeff, with his view on the whole different pieces and mechanics of what is attractive to ShareCare as they're able to have M&A in that space. But from your vantage point, from the deal-making vantage point, and also from the viewpoint of within digital health and health tech related topics, what are some of the industries adjacent and within digital health that where you see some trends, and maybe you can share with us what's exciting?
Sure. So we spoke earlier about the importance of internet access. I think investment in digital infrastructure overall has become a significant trend, I would say, in the last 3 to 4 years. And it's all about improving internet connectivity, really to the ordinary person. And if we take a step back and we look at what governments like the UK government have done, I think it was a year or two ago that Boris Johnson came out and said that he wants to get fiber connectivity to every home in the UK. That goal is universal. But the problem that we have is that fiber connectivity is very, very underpenetrated. I think a study that was done last year shows that in the UK, only 21% of homes have access to fiber connectivity. If you look at the EU more broadly, that number is 42%. Whereas if you look at Scandinavia, the likes of Sweden or Norway are in the 80% bracket. So there's still a lot of room for this space to be penetrated within countries like the UK. And therefore, what's happening is that essentially a new sector has emerged where you have these small fiber to the home players being created, being funded, looking for capital, looking for backing to create this superior connectivity that we can all benefit from in the future. We had the benefit of advising one kind of company like that, a company called Community Fiber. As the name suggests, Community Fiber was originally set up to get strong and good fiber internet really to inner city council estates, people who live below the poverty line, giving them access to internet at a sensible price point. And that business was able to raise 400 million of equity and debt to back its growth going forward. And we've seen so many of these types of businesses come to market in the last really 3 to 4 years, but it's really picked up, I would say, in the last 18 months. And there's more to come. And interestingly, it's put pressure on some of the bigger giants as well. So some of the bigger telcos are also now being forced to invest heavily in their own fiber networks and to create this superior internet access. So I think that's an area which is important for the growth of digital health, which we're seeing a lot of investment into. And I think it's a trend that is going to be beneficial to digital health. And I mean, I think more broadly, if we think about healthcare infrastructure overall, I would say, you know, over the last 5, 6 years, a lot of investment has gone into that space as well. And really, if I take a step back and I think about how digital health fits within that, I think of it as a Venn diagram where you've got technology or telecom infrastructure, you've got healthcare, and you've got infrastructure. And these three things converge with digital health at the middle. And I think if you look at each of these pockets, a lot of investment is going to each of these three areas that digital health will therefore inevitably benefit from. So those would be some of the trends that I would say are relevant for the overall digital health picture going forward.
Mm-hmm. And I think also within this panel, if we look at how international we are here, we have some of you on the US side, we have others on the European side. And very often, you know, when you talk about some of these topics, it's all kind of just in dollars and cents and what kind of transactions, but of course there are dynamics behind that. And I think in the US, what we've seen post-pandemic has been quite amazing, in both a kind of a startling sense, but also in a sense of renewed hope. And in the US, you have an employee-sponsored healthcare system, which is from the times of Eisenhower. And then you've seen the people who are left behind because maybe they don't get employee-sponsored health insurance kind of getting filled in over time. I think Obama probably being the most prominent of those, helping to fill in some of those cracks. But because the US has this kind of fragmented system where you have some insured, and then the pandemic showed that some are also heavily affected in these situations, that created an opportunity that we simply didn't have here in Europe because we have more government-sponsored initiatives that were already sitting kind of in place. But the silver lining is that the private sector really stepped up and was able to do phenomenal things for the sector. And so my question to you in this post-pandemic era, if we can even call it that, I think this thing is with us it's going to be with us forever. Dr. Jenkins, you can probably tell us something about that. How do you see your role in addressing those disparities? And I'm going to start with you, CJ.
Sure. First, just going back to something Jeff had said, I love what he's building in terms of a trusted brand that could be trusted by clinicians and consumers alike. That's such a big deal because in certain segments of the population, especially, there's not a whole lot of trust. And there is such pent-up demand. And I'm not talking about the pandemic, I'm talking about decades and decades of consumers, patients, human beings wanting to be partners in their healthcare, to control their data, to understand what's happening with their health and wellness, to be seen as the experts of their own bodies. So kudos to platforms like this. Just a word of advice to those of you watching who are actually building your own companies. What he says about fatigue on the part of the purchaser being a health plan or a health system, that is real. And so if you can solve a problem comprehensively with a platform, all the better. From an investment perspective, the most perfect digital health technology does not always win. It will be the technology that can be incorporated into workflows and that is scalable. And I want you guys to keep those things in mind while you're looking for partners to scale, or even when you're talking to investors. And all that said, I think digital health will help us with the large swaths of the population here in the States that get left behind because healthcare is not treated as a right here. And so people are working hard on solving the problems for the 80 million people currently on Medicaid, which is for the poor and otherwise uninsured. It's a state and federal program, but it's hard to scale innovation in the population. And so while there is truth that innovation doesn't trickle down quickly, it starts with the commercially or employer-based insured, and then maybe for the rest of the population, people are realizing now that we've got to find other models. Is it a venture model? Maybe not, because venture is built to do a certain thing. You get your money from your LPs and you're looking for a big financial return, but maybe so. And I think people are looking hard at it. We have to, with 80 million people on it and with half of births happening under Medicaid. And with maternal health results being what they are in the States on an overall basis, not to mention with communities of color, it's a national imperative. It's hard to do in the community because the reimbursement's not there, but also because the rules, if you're going for something that's payer-based, the rules are by state. And so a fledgling startup is not able to scale with 50 different states and 50 different sets of rules that change according to the whims of the government, which is the other problem or challenge here. Things aren't stable. So it's hard for a Fortune 100 company to business plan if our government swings back and forth in terms of its ethos, policies, leanings, right? Much less if you're a startup company. All those things aside, I think we're all still bullish, and you can see it in the investment results. I think we are at a great time in history to move those tectonic plates, if you will, and companies like Jeff's and others can help really lead the way in a way that's credible and responsible.
Yeah, well, Jeff, maybe you can tell us a little bit about that. I think, Christina, you bring up really an excellent point here about that access, urban communities, rural communities, Native American communities. Jeff, how is ShareCare, or is ShareCare yet there to support this kind of access?
Yes, we do Medicaid work. And so as part of ShareCare, but I think more broadly is, when I got back into digital health in 2012, what brought me back into digital health was the promise of the smartphone, because I really looked at that and said, this potentially could be the greatest healing device that we've ever seen, because everybody has one. And that's only become more pervasive since then. But there had to be some other building blocks that needed to be put in place for all. And so we have invested, I think, $80 million in building out a community well-being index. And so we collect all these surveys looking at physical health and mental health and financial health and sense of purpose and community, initially thinking that if we were to really wanted to build a Waze, then we had to understand where people live, work, and play. And what we've learned is where they live, work, and play matters to their health as much as their genetics and their lifestyle. So that, I think, is a big couple pieces of, being able to measure well-being, be able to tap into smartphones. And as I mentioned earlier, when you think about platforms, think about like these three kind of major themes. One is the data interoperable? Can you put the data to work? So whether it's self-reported data or device data or claims data or social determinants of health data or medical record data, how does it talk to each other and how do you access it? Second is this idea of user experience is really key. Is if I was to give this platform or solution, whether it's a point solution or a platform, to my mother or my kids, would they know what to do with it? And then third is this affordable for all? What you're creating, is this affordable and for all, and does it get cheaper over time as you begin to scale that? And so being able to understand your well-being, literally the heartbeat of America in our example at every zip code, being able to recognize new trends. I think this new trend post-pandemic is this idea all around health security. So we have cybersecurity to protect infrastructure against the virus. What are the best practices that can be tech enabled to make sure that environments are safe and kept up with best practices in a way you can step and repeat it every day? And then lastly, this idea of resilience, and how do those three things all work together? So as I become more resilient, I'm strengthening health security and I'm improving well-being. And can you do that in scale where you go from individual transformation to community transformation? I think digital health has the promise, to do many of those things.
Yes, and I think that is a very good roundup to our discussion on the opportunities, risks and opportunities of digital health. I mean, here in Europe, we have security and data protection as really the focal points, I would say, and even leading in some of these spaces when it comes to paying attention to some of those things. I understand at ShareCare, even you're also focusing on that and making sure that that protection is there and thinking one step further into what you call health security. And so I'm curious also from your side, Christina, on how you see risks and opportunities going forward within this field.
Sure. I think, we've covered sort of the privacy and the amount of consumer engagement that's needed to build trust in sharing data. Lots of work ongoing on what data can be shared and how to keep it protected. But there is an imperative that sometimes goes without saying, and that is credible evidence that these things work. And so it's worth making sure that there's a body of clinical trial data or other study data that says using this intervention, this app, this platform, this remote patient monitoring system actually does improve outcomes in a cost-effective way. Otherwise, we're not improving healthcare value. So we need to aim for improvements in cost, improvements in experience, and improvements in access at the same time. I think it would be irresponsible if we don't get good bang for the buck, if you will. And so it's important that we keep an eye on whether or not something actually works.
I wonder, Nana, because we've had the US perspective on what we see in terms of access or lack thereof. And the employee-sponsored health insurance that you have in the US creating these huge gaps, but also opportunities for the private sector, as I said. And but from your European and more global perspective, perhaps you can share with us what you see in this new post-pandemic era, addressing maybe some disparities of some of those people getting access. And I understand that you also in your free time, you work in disaster relief, et cetera. Maybe you can tell us a little bit about the kind of work that you're doing, but also the opportunities that you see with technology getting healthcare in a further reach now that the pandemic has actually shown us what kind of disparities are out there.
Yeah. So I will sound like a broken record when I say this, but I think the role that the internet has played through this pandemic cannot be underrated or undermined. And the fact that it's brought really everybody together in a way that it never had before, has been magnified or accentuated through this pandemic. The work that I do with the charity is called Humanity and Inclusion. And what they do is bring disaster relief to countries and to people who have gone through traumatic experiences, be it wars, be it natural disasters. And I think when COVID hit, we saw the nimbleness and the ability of organizations as small as this organization, which is, although it's a network of a federation of charities, in the UK, it's only 20 people who are running this charity. But they have operations, they're on a list of emergency contacts that governments can call up if anything happens. And when the pandemic hit, they were able to mobilize and get food, supplies, emergency help to people that needed it in desperate conditions. And I think one of the ways that we were able to do that was able to, get people working online and being able to stay connected with the teams on the ground, to be able to respond to these situations and adapt. I mean, there was so much innovation as well that came with that, in terms of using centers that would historically have been places where people met, turning those into centers where people were coming to get COVID treatment, turning vans into stations where people could come and sanitize, because in some of these regions that they were working in, it was important to pivot. So I think the internet has played an important role in ensuring that there's information flow and we know what's happening on the ground in various places, but it's also enabled charities and people who are involved in giving and reaching to the most vulnerable in society access to information, access to funding in ways that didn't exist before. I mean, if we think about crowdfunding as one of the newer ways of raising money, which is, 10, 15 years ago, something that was unheard of, those sorts of innovative ideas around funding have all come about because of the internet. And so if I think about innovation in particular, and I think about where the world is going, the internet has played an immense role. And so all of the investment that's going into things like fiber connectivity, data centers, subsea cables, all of the infrastructure that is being built around ensuring that connectivity is happening at a rate that is beneficial to everyone, means that ultimately everybody on this planet will be able to connect and ultimately get access to things like healthcare, better social facilities. Through this pandemic, I've had to visit my GP on the internet because that's been the safest way to do it. And I think even if we think about the way business operates. We've all had to adapt. We've all had to become a little bit more creative in how we do things. And the internet has played a big role in that.
And so we've been talking about trends in digital health and other trends such as ESG. You hear so much about ESG. Meanwhile, it feels like it's become a buzzword. But you know, these three letters mean something: E, S, and G. We hear a lot about the E side from the climate perspective. But I'm just wondering what ESG means to you. From what angle do you access ESG for your business and from your worldview? Christina.
Sure. So, I'll let you behind the curtain a little bit. Carrie and I were talking about this before the panel, and I said, depending on the room that you're sitting in, you may not use the term ESG here in the States, but certainly you'd use all of the elements, all of the individual elements. So as an investor looking at digital health companies, I want to make sure that those companies are responsible in how they're putting the product together, that they're minimizing waste where they can, that things are recyclable where they can be, and following those things. As someone who sits on the boards of national health plans and who used to sit on the boards of health systems, it's a little bit more comprehensive than that. Things like data privacy and security that we've spoken about earlier in the panel are important. Cybersecurity is a big health risk in that it is a risk to trust. It is a risk to your personal information that can impact your well-being, so impact your health, but also things like governance, inclusion, who's around the table making the decisions on how we improve health of all of the populations, and not just certain populations. All of these things come into play in leadership and how you are running your organization. So again, maybe in some rooms, the framework is not used, but the elements are indeed under consideration.
Yes, and I mean, what we do have internationally and also with the SEC and Biden's call, we're seeing frameworks that are being put into place. And companies will have to follow these regulations. They have it per industry, what folks are supposed to do, or they're going to get in trouble. There'll be consequences for non-compliance. So very interested to see what happens. This happened in Europe with GDPR. Everyone waited till the last minute. Lots of stories there. But Jeff, for ESG, for ES or G, what does it mean for you and what does it mean for ShareCare?
Well, I think, it's really important for lots of reasons, and including the brand that we're trying to build of what does ShareCare mean. And so like as I share my data, I get my insights for my health, but I'm also creating insights for our health. And outside of the governance and many of the important issues that Christina talked about, I always love when you actually see it, come to life on the ground. And one of the product offerings that we have is something called the Blue Zones. And it's all around longevity, where this gentleman named Dan Buettner traveled the world and he embedded himself in countries and he studied why centenarians were thriving past 100. And he built a cookbook of these kind of 9 attributes of why do people, are thriving past 100, and said, could we go into any community and invest in people, places, and policy and be able to replicate these Blue Zones? And so we've now launched in 57 cities in the United States and 12 states, and everything from going to Fort Worth, Texas, and trying to create more of a plant-based diet to Iowa to Hawaii, and getting all the stakeholders to work together under a framework of how to make the healthy choice the easy choice, where ESG is embedded into that, into the fabric that everybody pledges, to engage in. So it's important at the corporate level, it's important at the brand level. And then, I love when you can see it come together in local communities around people, places, and policy.
And thanks, Jeff, for that very insightful answer. And for you, Nana, what is ESG for you?
So I think, given that I've spent the last 2 years in the infrastructure space, focused on M&A, it's been very, very revealing to work with some of these companies and see the increased focus on ESG. So what we've seen happening more broadly in the market is that any asset that has an ESG angle, in the case of digital health, obviously ES and to some extent the G is very relevant. Multiples that are going for these types of companies in M&A transactions are at all-time highs, and they've been on a steady growth. And taking a step back, we've seen all types of capital within the M&A space go towards these kinds of assets. So be it private equity, be it infrastructure funds, or even be it debt instruments. And the focus has really been on ensuring that there is a sustainability angle. And I think even if we look at the public markets and we look at some of the ways in which capital is raised, whether through IPOs, whether through SPACs, even some of those types of asset classes have pivoted to have a focus on ESG. And this is a trend that we think is going to be sustained going forward, especially as regulation increases, and especially as everyone becomes more aware about creating companies that are sustainable and that give benefits to the broader society. And so, debt funds are being created. If we think about other sources of financing that are focused on ESG. So pretty much every source of capital that you can think of to fund an M&A transaction, to fund the rollout of a business, is increasing its allocation towards the ESG asset class.
So continuing on exit strategy, I'm sure with our deal maker here on the panel, you also have a view?
Yeah, so I would say when you're thinking about exiting a business, there's a number of things to consider as a founder. Firstly, how much are you exiting? Do you want to exit fully or do you want to exit partially? Because that drives the type of investors that you get looking at your business. Private equity investors, infrastructure investors tend to want founders to have a bit of skin in the game. And so they will want you to partially exit and come on the next wave of the business growth with them, with your investment sitting alongside theirs. Whereas a strategic is much more agnostic and more likely to want to buy 100% off. So I think that's one of the first questions to understand. And then when it comes to what exactly are you selling? And I think working with founders, we spend a lot of time thinking about how we position a business ahead of a sale. And the what are you selling question is really to ensure that the investor universe understand your USPs as a business, understand how they can maximize the value of the business going forward in terms of thinking about their own exit, especially if they're infrastructure or private equity investors. And in the world of digital health and anything that has an ESG angle, we're seeing that the importance of positioning that ESG angle has never been more true. And so, digital health and how we position that in terms of the ESG angle is critical. And I think if we think about the characteristics of these types of companies, they're attractive to technology-focused funds, they'll be attractive to healthcare-focused funds, and they will be attractive also to infrastructure-focused funds. So you're trying to position your business to ensure that all of these types of investors see the benefits of investing in your business. And therefore, you have to make sure that you're straddling that line carefully to tick the various boxes that they would want to see. I think the next important thing is timing. People underestimate the importance of this. And I think there's two things within that. When M&A markets are on the rise, sellers are able to sell their business for extraordinary multiples. However, you also got to think about competing processes. So if you're coming to market at a time where there are 3 or 4 other businesses like yours that are coming to market, it tends to have a significant impact on the level of appetite that you'll get, because at the end of the day, you tend to have the same types of investors looking at these types of businesses, and they've only got so much bandwidth to allocate to all the assets. So thinking about when you time the sale of your business is also important. The next thing I would flag is making sure that you're ready for diligence. An important aspect of any investor, whether it's strategic or financial, looking at your business, is wanting to get easy access to information to help them diligence it. And so thinking about that when you're, in the run up to whenever you plan to sell your business, ideally 2-3 years in advance, thinking about how you're reporting, thinking about how you're collating information on your systems in a way that's easily accessible and easy for an outside party to digest is critical. I think the final thing to flag is to think about the role of debt within your exit. So how much debt is on your business today? How much debt would a new investor coming into your business need to raise to fund either buying part of your business or buying all of it? And where the debt markets at this point in time. I mean, obviously, as I mentioned before, all asset classes are heavily allocating funds towards ESG focused assets. And so at the minute, the debt markets are ripe for any assets within that space. But thinking about that and thinking about how that factors into your process, making sure that that's optimized so that bidders are able to value your business at the highest possible level is also really important. So I think these are some of the things that, you know, as you're exiting the business and thinking about your point of exit, but also the next exit for the investor coming in, especially if they're financial, a lot of them will start to think about their own exit strategy while they're acquiring your business. So you thinking about that and being able to lay out your business plan, lay out your strategic focus in such a way that you think about the long term is critical.
Mm-hmm. Yes, and it's funny that you mentioned the role of debt. That is important indeed. Of course, on the panel, we have Jeff at ShareCare, who's cash rich and debt free, which is a very good situation to be in for his business and his investors. They're investing in the growth. And maybe we can transition to him because I think that's a good seg.
You know, I want to show that to investors that we're innovators, right? That we're on the cutting edge of technology, but that we can show results, that we're operators, right? That we're profitable, that we can buy companies and integrate them, and we're unifiers. That we can take somebody very fragmented and bring everybody together. And our capital strategy, I think, represents that. So our idea was Amazon's coming to healthcare. Let's use this as a catalyst to take big trusted health brands and get them to innovate faster by connecting the living room to the exam room to the workplace. So started in the living room and went after media companies. So it was Oprah and Hearst and Discovery Channel and Sony. Then moved to the exam room and said, you know, the physician, that last mile is going to matter. So we got the HCAs and the Trinity Healths and other health systems to invest. And then we went to the who pays for all this. And so we got Anthem and other Blue Cross plans, Swiss Re, Quest Labs, folks like that to invest. And we would always surround those strategic investors with financial investors so that we could kind of ground the valuation that we were aiming for at that particular round. But I've always found that in all the businesses that we've built, I love strategic investors married with financial investors where you can get financial alignment and strategic alignment to grow faster.
Mm-hmm. And of course, coming from the same coin, but on the other side as an investor, you're also a board member. You touch so many different pieces, and maybe you can also complement or fill in what Jeff just talked about there.
Mm-hmm. Yeah, I agree 100% with what Jeff is describing in terms of cultivating relationships with strategic and financial investors. And remember, I'm seed and early stage. It is never too early for you, those of you out there who are building companies right now. And it's not just networking, it's really understanding what your strategic investors are looking for. And in the US, it is untangling the puzzle of the incentives of the providers or the health systems, the payers, the health plans, and then the patients or consumers themselves. Get to know those dynamics early, get to know those players early and understand what they want. Having strategic investors is a smart thing to do for all the reasons that Jeff described. For Portfolio, a firm where I lead investments, we invested in Maven, which is a women's telehealth company, as strategics, where I called Kate Ryder and said, hey, I know you're at your Series D. I only invest up to $1 million per company for Portfolio, but we're strategic. I have 249 women limited partners that want to see you do well. She got it, right? And so this is how it's important to cultivate those relationships and understand who is also interested in what you're building, and start early. It's never too early.
I totally agree. I'm an angel investor, and you see founders, some really savvy ones, already very early on by who they choose, already at the angel level, saying, look, I don't just want to take money. I want you in your network. And so, yeah, I can absolutely agree with that. Thank you for joining us today. I just like to close out this panel session with one final question to you, Nana, and to the rest of the panel. What are some of the risks that you see? I mean, I think a major risk that many see would be data protection and privacy. If you want to have a sustainable business, that is something that has to be paid attention to, and maybe offer an opportunity counter to that. Would you have a view there, Nana?
So I think regulation is going to be an important part of that in terms of ensuring that the consumer is protected. So ensuring that when digital healthcare companies are created, they adhere to a standard, and that standard is universal. I also think that there's an opportunity within technology and AI to improve the way people access information through the internet overall, and digital health is a part of that. And I think investment in that area and continued growth within that area will lead to a solution and innovation that will help overcome some of the problems with data challenges and privacy protection for individuals. I also think that in terms of giving more and more power to the user, so I like what Jeff mentioned earlier around creating apps where the individual owns the information. I think that is part of the future going forward as well, to ensure that people feel empowered to go online to access healthcare products and to deal with their health online.
Yes, well, I mean, I think our viewers could see today from the various angles of expertise we have on this panel. We've covered quite a few topics. Thank you very much, everyone, for joining us, and looking forward to the Q&A discussion soon.